I'm looking at your numbers, and in 2023, you made 122% profit.
Yeah, that's okay. How much did you fund your account?
My husband had made for $5,000.
What'd you do?
I started selling bullpuck spreads on Apple.
And it worked?
It worked right away, so I put in the second one.
It worked too?
Yeah, he would just deposit more money in. He said, "You're trading this."
Make 47% in 2024. That's probably more money than you'd ever made before in a year, Nathan, right?
Yes, it was a whole career's worth of money.
All right, welcome back, everybody. We are here for another Rising Star shoot today. I'm excited about this one. We don't get a lot of women in here. Emily, welcome.
Thanks.
It's really fun to have you. We've been dying to have a woman rising star on here. We've got you. We trapped you. You're in from Ohio. And I guess you spent some time in Chicago before.
Yes, I went to school here, University of Chicago, and then I lived here afterwards, so I'm sort of a Chicago native.
You're kind of a Southsider, like the Pope.
Yes.
University of Chicago, you were a history major.
Mm-hmm.
And then you got your master's, you almost got your PhD. We got your whole history, educational history down, and yet you ended up as a jeweler.
Yes, I did.
Where'd that come from?
It was my hobby and stress relief while writing my dissertation. So the jewelry became more and more time. Dissertation.
So you liked it. And yes, the dissertation took a back seat. And then, yes, we have a couple of people here like that. Also from University of Chicago, where after about 6 or 7 years, the dissertation got lost not in the jewelry making, but in something else. I guess you had a pretty successful jewelry business from what I hear. Yeah. And what happened?
Well, I was making some silver ingots in an artisan studio, and I was melting the silver, and then you have to put it through this rolling mill, which is like a pasta mill, except metal comes out, and you have to hand crank it. And I was cranking away and it was really hard, and I happened to glance down, and my wrist bone was popping out. And so I stopped, and
It's a good time to stop. That's what we call an act of God. That's God telling you this time to stop pumping.
yeah. So I couldn't use my wrist the next day, and the doctor said I couldn't work for like 6 months. So I had nothing to do.
And at this point, you are like, what year is this?
This was 2019. So the summer of 2019. So I asked my dad, I was, telling my dad about this and telling him I didn't have anything to do. He was an options trader in retirement. And he told me about tastytrade and that I should trade options also. And that I should just simply go on tastytrade and learn how to do that from them.
So we got to thank your dad for all this. And had you ever traded stocks or options before that?
No, I never even paid any bills. I just I was not interested in anything financial and just,
So you'd never made a trade before 2019?
no.
Does your husband trade at all?
No.
So it was just your dad kind of saying, hey, maybe you should check this out.
Right.
And what were your first impressions of checking out Tasty?
It was really relatable and understandable. Because at the same time, I bought this textbook and I opened it up and it was like a big math equation.
Hold it, a textbook on option trading? Oh my God, what textbook?
There is one. It's a big textbook. It says options across the front. And you open it up and there's all these math equations on it. So I was like, I'll read that later. But I went through a lot of the Tasty videos. I did Mike and his whiteboard. And, I rewatched them. I took notes on them. I watched them over and over again until I got the hang of it. And then I just started trading.
That's great. I love the story. It's 2019. Do you mind if we say your age?
No, go ahead.
You're 51 today now. So you were about 45 then? About 6 years ago?
Yeah.
How much did you fund your account with?
Well, It was just going to be a test to give me something to do. Because sorry, my husband agreed for $5,000.
$5,000. And he's probably like, what is this so-called tasty tray? Yes, and it's exactly. And here's $5,000. Try to make it last as long as you can.
Yeah, basically, yeah.
Okay. What'd you do?
Well, I started selling bull put spreads on Apple. And
Why was that your strategy or trade of choice?
the put spread allowed me to, well, one, it limited the loss, and two, if I didn't want to have the loss limited, I could sell the insurance put and then take the stock and then just sit on it like it was an investment. So that was my backup plan.
Obviously, you did it really small. And were you nervous? Like, I'm going to lose type. Oh, you were.
Yes,
Good.
I was nervous and I wasn't sure what I was doing. I was afraid to put in the first trade.
And you did, and it worked.
Yes, it worked right away. So I put in the second one. And then I was really astounded because it was like,
It worked too.
yeah, because it was like doing the crossword and getting paid. So
So you making a couple trades in 2019. The market was going up. I mean, I don't remember everything about 2019, but the market was actually heading towards record highs actually just before the pandemic in 2020. So you caught that little move to the upside. Did the pandemic? What happened?
uh,
Because Apple got killed.
I know I was flying back from an art show in Baltimore right before we closed down. And I remember coming back and the market was crashing. And not only that is that they closed down all the gold suppliers, the jewelry suppliers, the art shows. Business was done.
Okay.
I had been making so much more money trading with less physical labor than goldsmithing. But we did have the crash, and I had been very careful with my margin and my account, and I just simply rolled out the puts 1 year.
Oh, you pushed them out a whole year.
Yeah, I pushed
So you went into some leaps.
leap puts, I suppose. Yes. And then I waited, and then when they just announced that they were easing, I took all my cash or everything I had, and I bought back in.
Nice. Okay, worked.
Yes.
And that's 2020.
Yes.
By the end of 2020, let's just say, either you sat down with your husband or he came up to you and said, hey, you're doing pretty good.
It wasn't like a mutual agreement,
Oh.
just more money kept showing up in our account. Like he would just deposit more money in.
So he wouldn't even talk to you.
No,
Why didn't he tell you he was doing it? Because he just,
that's the way we handle things.
oh, okay. You don't talk about it. I like that, actually. I might need a little marriage advice. But so he would put more money into your account, and because, well, obviously he believed in what you were doing.
Yeah, he was watching the returns. He would look like every week or two.
Did you actually let him log into your account to see it, or he looked over your shoulder? How'd this happen?
Is in computers, so I guess he
Figured it out.
yeah, he has access. I gave him access to the
You gave him access to your platform.
and the behind the scenes where the
Got it.
apex where you can pull the
Sure.
Yeah.
So he saw the results, and for about a little over a year, you were pretty consistent. I mean, you didn't really have any drawdowns. You kept adding capital. You got, I'm not going to talk about the exact number, but you got up into the mid to high six figures, right? So that's where and that's kind of your starting point. Now where are we now? Where are we year-wise? We're kind of like 21-ish, 2022
Probably about 2021.
of the money that you guys had saved up, nest egg, whatever you want to call it. He was pretty committed.
Yeah, a really big chunk showed up in our trading account. It was a lot of our savings at the time.
That's a hell of an endorsement.
Yeah,
Were you nervous?
I was really scared, but he totally believed in me and supported me. And he said, "You're trading this."
That's unbelievable.
So
That's a great story in itself. And so, because you don't, like, that's just a tough thing to do for you. It's a tough thing to do for him. Um, but what's interesting about it is you didn't change your style, right? You kept doing the same stuff.
Yeah.
And 2022 was a pretty nasty year. Market sold off pretty good, 2022, because we had you know, the rally after the pandemic in 2020. We had the whole meme stock explosion in 2021. And then in 2022, we kind of had this little bit of a nasty sell-off.
Right.
How'd you survive 2022?
2022 was tough. So I sort of survived by rolling things out.
Yes.
I did get into a sort of bad habit of rolling things wider to still get a credit,
Mhm.
and that worked along just fine for a long time. Um, and so 2022, I did not make as much as the other years, but also uh, my account wasn't on mark to market yet. So
You were in portfolio margin, you hadn't switched to professional trader or mark to market.
I had to switch to mark
Got
in 23.
Got it. So now at this point, what you're mostly selling put spreads. How wide are your put spreads? What is the duration of your put spreads? And what is the underlying product that you're using?
Okay. So I would try to keep to the tasty principles, though I know you're not supposed to roll them wider. Little bit of cheating.
That's okay. No, whatever works for you, of course.
So I would sell them 45 days out. I would sell them 10 wide to start, sometimes 15 wide. And I would usually do like 10 contracts. And it would be on an underlying stock. And I think sometimes at that time I also did the indices like triple Q and like that.
But did you mostly use equities?
Mostly equity,
And how do you pick your equities?
the stocks that are going up. They have to
Very sophisticated method. Yeah, got it.
they need to be large liquid stocks in the S&P 500. And keep it to a small handful that you watch very carefully and you do.
How many positions would you have on them once?
I would have like maybe 10 to 15 symbols, but I'd have a lot of trades within each symbol. So maybe like at that time, maybe like 50.
So
Sure.
50 positions.
Yeah.
So give me an example. Let's say we took a liquid stock like NVIDIA. Did you trade NVIDIA at all?
At that time, probably.
Okay. Let's say it was a liquid stock like NVIDIA. So you would do multiple 10 lot put verticals, sell multiple credit spreads, like up to what,
Well, I would try to keep my margin, leave a reserve of about 50%,
okay.
so that because
So the total capital you're using was about 50% of what you had
yeah,
capital. But how much would you commit to a certain underlying? Like how many different, you said 10 different underlyings at least, or
yeah, it was a lot. I mean, um, the core trading strategy would allow me to really concentrate on certain underlines that I wanted to bet on, and so
can you give me some examples of some of them? Like what names?
like Meta at the time, it's usually the big tech stocks.
And how far, what was your short delta? Like what strike would you sell generally?
I would usually sell the 20.
20 delta?
Yeah,
So that's your default. Now, did you ever do the call side?
I did the call side in 2023, but I didn't quite follow it exactly, and I never did naked calls. Okay. And I would have been better off, ironically, if I had done exactly what you had taught to do, the naked calls, because the insurance call would cut into my profit margin too much.
But mostly you were selling put spreads. Occasionally you'd sell some call spreads. And how often were you trading? Like multiple times a day, I assume.
Yeah,
Yeah.
I was.
Are you pretty much a full-time junkie?
Basically, I am now.
You are now. Okay.
Yeah.
I'm looking at your numbers, and in 2023, you made 122% profit.
Oh, yeah, yeah.
Yeah. That,
Right.
no, that's okay. That's probably more money than you'd ever made before in a year in anything, right?
Yes, it was a whole career's worth of money.
Career's worth of money.
Yeah.
Like, what's going through your head? Like, why doesn't everybody do this? Or why doesn't, like, what's going through your
Was wondering why, yeah, and I was trying to recruit, other people to do this.
And nobody would they?
They were scared.
Yeah. Yeah. At that point, you have an unbelievable year in 2023. Like I said, up 122% on a significant amount of capital. What's your husband say then?
He was really happy. He retired recently, so I guess I make enough money for both of us, so.
That's incredible. And so you've been disciplined enough to keep doing the same thing. Like you haven't changed.
I change according to market conditions.
What does that mean?
I've noticed at some point the premium is in some days the premium is not high enough to justify the risk that you're taking for selling. The premium is artificially low. I will buy leaps. And the leaps do really pay off. And then when the premium is really high, I'll just sell the puts.
So you're kind of legging some of this stuff a little bit.
A little.
Make 47% in 2024, which again, I'm going to go through a lot more of the details in a second, but how's 2025 going so far?
I have to beat the S&P 500 every year. I mean, that's what I set for myself.
That's your goal. Yeah.
Yes, I must beat the S&P 500. So I am beating it fine so far this year. I think I'm at 12%. S&P's at like 2.
Oh, you're up 12.5%. That's great. Are you still using in 2025 now? Is it mostly equities, or have you gone back to some of the indexes? Because we had that vol explosion in April. So does that change the way you think?
I haven't been doing the indexes because it seems to me that the leverage, the momentum on certain equities is a lot larger than the momentum on the index only, and that the returns are better if you pick out the largest stocks in the S&P 500 that are at a higher momentum and higher profitability than the slower moving ones, rather than you just cherry pick off the top, most liquid, most profitable stocks in the S&P 500 and trade that instead of the whole SPY.
Maybe that's why I don't make money a lot of times, because I'm doing the exact opposite, looking for the stocks that are going up so much and then trying to sell them. I'm a contrarian. But it's really interesting to me that, because what happens a lot of times is that people that have a similar approach to you, they get, it's very hard to check your ego, because you start to think, okay, well, why am I even buying the wings? Why don't I just sell the puts? Why do I even need to spread it off? But I guess by spreading everything off, it gives you just so much more capital to work with that you can,
It does give you more capital. It cuts into your profits.
a lot. Yeah, sure.
Yeah. So sometimes I do sell the naked puts, but I am very careful with the naked puts.
Are you conscious of your overall deltas? Like, do you look at those, like your
You
beta weighted
in the
delta?
beginning, but then I just,
You don't look at your beta weighted delta?
no,
No.
not anymore.
Okay. And do you look at the amount of theta that you've collected? So you're just thinking about it, just you're a pure premium. This is how much extrinsic I've sold.
Yes, this is how much I can extract and produce.
This is how much premium I've sold. This is how much I can extract. And what % do you think you can keep on that?
I know I can keep more than the 50%, but I usually close it at the 50%. So when I sell a spread, I close it at 50%.
Got it. And what happened in April of this year?
This is like a
Early April, when we
Sure.
no, when the market had when the whole tariff thing came into play, and the market sold off, and we sold off from let's say where we are now, a little under 6,000, all the way down to a little under 5,000. So the S&P sold down 20%.
right.
There is no strategy that you can have when you're short put spreads where that works. So you must have taken a lot of heat in the beginning of April.
I do. My strategy does take big drawdowns. What I did is I split the time frames on my account.
What does that mean?
I bought a bunch of leaps at the bottom. A bunch, yeah, call leaps. Yeah,
Oh.
I bought them, and for 1 and 2 years out, like like Palantir and stuff like that, and
Okay.
Nvidia and stuff. So,
Because you thought these stocks were cheap.
oh, they were cheap. Yes,
Well, in hindsight, they were cheap. With the time, you didn't know that. I mean, you thought, well,
because the macro picture, the larger picture for these stocks hadn't changed, right? And so
100%, but you still don't actually know.
you don't know for sure.
Yeah, right.
Yes, it is a
So you bought a bunch of long-term leaps,
yes.
and it actually worked out.
Yes, I'm still holding the leaps though, and then I took my freed up cash and I short-term traded with that. So I have like a long time frame, and then I have a short time frame within my
And on the short time frame, your short put spreads must have lost money
They did.
on the way down.
They did. I closed them out, and I usually don't do that because I didn't want to take a really big drawdown. So I closed them all out early because I was like, the macro picture has changed. We cannot follow the same rules. Just close them out. And I saw your video like last week, and I was like, I shouldn't have closed them out because I was looking. They would have, if I could have rolled, I could have rolled them, and I could have not taken that loss.
In the last couple of years, well, since you've started, you've got to experience, virtually every market condition. You've had bear market, you've had bull market, you've had extraordinary, binary events like the pandemic, meme stocks, the tariff thing. So you've basically seen everything. Are you trading any commodities, any futures options?
No, I'm not trading futures options. I am experimenting with the metal futures. I feel more comfortable with that because I used to be a goldsmith, and I
Do
trade.
you think because you used to be goldsmith, you can trade gold? That's a very okay.
That's exactly what I think.
So in other words, you're buying golds.
No, I'm actually sort of trading it, so I'll buy and sell it.
The futures,
No, micro,
the micro futures,
really small.
the MCG,
Yeah, but I also do. Most of my money is in GLD.
GLD.
Yeah,
Okay, and so you're basically short put spreads in GLD and scalping micro gold futures around it.
yeah,
Are you pretty much in front of the screen all the time?
yeah. It's hard to tear myself away. There's always something else to learn, and I still feel like I'm at the beginning, and there's so much more to find out about.
There is.
You know,
We're still all learning.
yeah.
Have you been experimenting with any other kinds of strategies?
I did experiment one with I would buy a long straddle on the VIX.
Oh God. Well,
And it did turn out, but the conditions I don't think are not there where I could repeat that right now.
got it. When you put your positions on, and you have a lot of positions on, do you ever take losses or do you always roll out?
I used to not take losses, but I take losses now.
Okay, so you found it a little more effective to take losses. You don't put stop orders in. You just take losses. They're mental stops.
Yeah, mental stops. I will take losses if I think that it's not going to come back, or more importantly, if the macro condition has changed, like tariffs or something like that.
So if you're short a put spread in XYZ and the market starts to go down and you think the conditions have changed, it's ugly, you would close that position out rather than sell a call spread against it.
Yeah. I would just simply, with something like a very large macro change, I can't be sure, exactly what's going to happen. I have sold call spreads out before against the put spread, and it actually does turn out pretty well. It's just recently, I just this is the first time I've done it. I just took them all off.
That's wild. I like it. So, right now, what percent of your capital are you using?
Right now I am using 95% for my capital.
95%. So you're all in right now.
Mm-hmm.
Got it. And mostly the same kind of positions?
Yeah, the large liquid S&P stocks where I cherry pick off the best ones, and then I accelerate the trade by putting options on it on top of the stock.
Because since the meltdown in, early April, May and June have probably been pretty good for you.
Oh, they've been really good.
Yeah, I was gonna say, yeah, yeah, they probably for your style, they've probably been great. Um, what's the game plan here for the rest of the year?
Well, I have to see. I'm thinking it may be time to take profits at some point.
Lighten up a little bit.
Yes. Yes.
Do you ever lighten up a little bit?
Oh, yes, I do.
Okay, so you are comfortable taking profits.
Yes, I will take profits and then I will sit back, but I usually will keep something on in the core positions.
You have to have something on, otherwise you will go crazy.
Yeah.
It's not possible to like wipe the slate clean.
No, no.
Yeah. Is there anything that makes you nervous?
Yeah, I think the idea of undefined upside risk makes me nervous.
Undefined upside risk.
Yeah, though I know, and I think that's more emotional than that's the last hurdle to get over than actual mathematical. Though the market does go up 1% more, you know,
Is there anything like trading wise, nuance wise, know how wise? I'm not saying it not intellectual, but just like, like if we know how, product wise, that you feel uncomfortable with, or you think like, hey, you know what? I understand all this.
yeah, I pretty much do. And if I have a question, I could just go back to the videos and watch them.
Got it.
So,
Well, that's been a lot of fun, Emily. This has been your story is amazing. And like I said, we need more women like you. And and we need more stories like yours because this is great. So thank you so much for
oh,
coming.
thank you.